Hey, what's going on, YouTube? It's been a while. Um, I've been having people reach out to me, asking me, different questions and such. But one of the main questions that I've been getting is how to get started. And people have been saying this is more so advanced stuff. So I actually want to shift in as far as at least just this video and talk about how to get started, what the internal workings of my ideology is and mentality is when it comes to this stuff, and some tips and pointers as far as what I would do if I were getting started, and what I would do if I didn't know the things that I know now. Um, and putting myself in someone else's shoes. Once again, it's not financial advice. This is just what I would do, given if I knew the things that I knew now. All right, and I wanted to take a different perspective. This video is going to be more tailored towards someone who doesn't want to pick individual stocks, or they want to take more of a passive role and not worry about doing research, and just know that they're going to be good to go. I mean, yes, if I was that person and I wanted to just take a passive role and not do any of the stuff that I'm doing, this is exactly what I would do. So first of all, I'd open up a brokerage. All right. Based on the research that I've done, I guess I'll hand it to you on a platter. I personally think that Fidelity is the best brokerage. Vanguard has a brokerage, Charles Schwab, all these, even Robinhood. The problem with Robinhood, although the actual app is really easy and nice to use, the problem is the actual company itself. For me, their actual financials and balance sheet is not as traditional and as strong as traditional brokerages such as Fidelity and Vanguard. All right. And ease of use, as far as the brokerage and how everything works out, I think Fidelity is the best. I've had Vanguard, and I've researched, consumer reviews on the other brokerages, but my personal opinion, I'd use Fidelity. And if I had to go over and do it again, I'd use Fidelity, and I use Fidelity now. There's no sponsorship. Okay. So I'm not sponsored by Fidelity, and I'm biased in that regard. So I would just go to fidelity.com. I'd click open an account, and where it says investing and trading, you want to hit this brokerage account, and it's going to prompt you to go through all this little questionnaire. Okay. And you're just going to go through that. It takes about, I want to say it took me about a week to get my brokerage set up. So, I mean, I think there's a verification period, and there's just different things you have to go through. But once you get the brokerage set up, you should be able to buy and sell stock. And that includes ETFs and bonds and everything. So, all right, once I got my brokerage set up, there's some different funds available that I'd like to talk about in this video. This is the S&P 500. All right. They're a S&P 500 index fund from Vanguard. This has the lowest expense ratio that I've seen for an S&P 500 index at 0.03%. All right. That's 3 basis points. It's pretty cheap. All right. Now, this mirrors the S&P. This is the S&P. All right. And let's go down to performance. Overall, since inception of this fund, it averages 13.71% since the fund has started. All right. The total return, let's see if I can get to the total return here. Just bear with me. Okay, here we go. Total return. Since inception, this fund has returned 430%. So 4x, 4 times. So if you put from 2010, anything you put from 2010 is worth 430% more. Okay. The 10-year is 232%. Okay. Bottom line, the S&P 500 is the actual benchmark. So whenever you hear other investors or anybody talking about beating the market or what is the standard, it's the S&P 500. Don't fool yourself, and don't let anybody fool you otherwise. All right. Most of the research that I've done, hiring actual financial professionals is a waste of money. All right. If you hire some sort of financial firm, such as a hedge fund or some sort of financial fund or firm to manage your money, as far as via like financial advisors and load funds, don't need to do all that. I would just open this brokerage up, and I would put a certain amount of money, anything that I could, into this S&P 500 index fund. They have different variants too. This is one that I would look into. Here's another S&P 500 index fund, but it's actually a growth fund. So it's still the S&P 500, but the weighting is more towards the growthier stocks. All right. So your Apple, Amazons, your Nvidias, your more so, there's going to be more allocation weighting towards those growth stocks. You get a little bit of a less of a dividend yield compared to VOO, but the actual total return as averse to VOO, which how we see is 430%. With VOOG, it's actually over 500%. The actual expense ratio is about 3 times more, so that's something to take under consideration. All right, so that's just part of it. All right, so let's look at our compound interest calculator. Let's say that you put $350 a month into VOO, and you did this for 30 years, and you started with nothing. All right. So next month you put $350 in, and every month after that you put $350 in. All right. We'll put an interest rate at 12% annualized. Excuse me. And as far as how this all works out, if your average was 13.71, we're being conservative. Let's say that the S&P doesn't grow that much. Let's say it just grows 12%. All right. You would still end up with $1 million at the end of 30 years. All right. I'm not a proponent of actual IRAs because you get locked into you're very old, and let's face the facts, you might get killed before, or you might die before that actual age when you can actually draw. I'm not saying that there's not benefits to it if you wait that long, but for me personally, from my professional or to my personal opinion, I would not do like a IRA. I just like to do just a straight up brokerage account that's taxable. All right. Nothing. Once again, nothing here is financial advice, and I'm not a professional financier. All right. So, with that being said, I want to talk about, here's some tips and pointers in what I would do. All right. Debt is your enemy. I would not, I would pay off all my credit cards, and I would never go into debt again. Unless it's a mortgage. All right, that's different. And a mortgage at the right interest rate. All right. So if you want to do that, you're essentially shorting the currency going long the building, and huge, really good inflation hedge, and there's utility to a house. So that's probably the only debt I would be willing to take on. Car notes, credit cards, personal loans, forget it. I would not do any of that. All right. Whenever a bank loans someone money, They take money from the future and front load it to you in the present, and society will deem it like it's a gift or something. All right, that's not the way to go. All right. Okay, so once again, bank offers you money. You think that you're paying interest. All right, they're front loading money from the future, giving it to you to the present, and in return, you're thinking, oh, I'm just going to pay this little piece of interest based on that debt. That's not the way I think about things. All right. I mean, you might get that sum of money right then and there, but in return, how I think about it is you're giving your future away. All right. You're selling your future. All right. So keep that in mind. That's the way I think about debt. Now, once again, if I wanted to take a passive approach and not worry about doing any research or not having to worry about knowing all this sophisticated financial mumbo jumbo, I wanted to just play video games or whatever and not even focus on any of this, and I just wanted to every month just put money in. I would probably pick VOO or VOOG and just let it ride and do its thing throughout the years. It's the safe bet. Now, why do I do the things that I do? All right. Remember, this is the benchmark. This is the market. All right. My whole thing, the reason why I'm doing all of these individual stocks is I'm trying to beat the market. I'm trying to get more than what the market provides. I mean, if all else, then I mean, why would I waste all this time doing this? So I want to get there sooner. I want to create wealth sooner, and investing in these younger growth companies is the way that I see as the path, all right, to getting there. It is riskier, but make no mistake, I'm an investor that's willing to take more risk than a lot of other investors. I'm a risk taker, and the way I see it is, if you want to be a player in this game, you got to be willing to take risks. Everything is a risk. Even the S&P 500 is a risk, but it's like, to me, I assess it, the risk is so low because our country's format of capitalism is based upon it. All right. 401ks and employer funds where there's standardized deductions for paychecks going into these 401ks. The whole idea is BlackRock or one of these financial firms will manage those, and they're taking fees off all of that, and they're doing profit sharing. So you might make 4% of gains annualized on return, as averse to what this is actually yielding, which is a little over 13%. So that's something else to keep in mind. Interest, get your income, right. You need to have more coming in than going out. So if you make $3,000 a month, and your expenses equal over $3,000 a month, that's a problem. You're already not going to be able to do what you got to do. Pay yourself first, and the way you pay yourself first is you set aside a certain amount every month to go into investing. A lot of other investors have different styles as well. I see it to where investors have half of their allotted amount that they can invest every month go into the S&P 500 index fund, and then the other half is all spread to individual stocks and stuff. I've seen and there's no rule on what you can invest in and what you can't invest in. You can buy both of these funds and all these other funds at the same time. So just some thoughts from me. Shout out to the guy at the Dollar General I was talking to. Hopefully you're watching this, and hopefully you're getting something out of it. Um, I hope everybody's getting some value out of this. Let me know in the comment. I'm getting more traction, more views, and such. Um, Please hit the like button and do a comment down below. Ask a question. I'm active when it comes to responding to comments. Um, so yeah. So with that being said, hey, thanks. Have a good day. I hope everybody has a good week. Like, subscribe, hit the bell notification, and have a good day.